The topic that we'll be looking at right now is something called as corporate restructuring. Now, what exactly is corporate restructuring? What exactly are we going to learn here is this. We are not going to learn the core accounting for corporate restructuring. We are only looking at types of corporate restructuring. In popular parlance, at least among students pursuing chartered accountancy examination, we always use the word amalgamation to refer any scenario pertaining to corporate restructuring. It can include amalgamation, but corporate restructuring is not only about amalgamation. So we will try and learn what are the related terms, whether it is possible for us to use different terms interchangeably or we are not supposed to use as part of the small little note. When we look at amalgamation or corporate restructuring, we are looking at these terms. For instance, there is something called as amalgamation, which is what I listed out, I just mentioned a few minutes back. And then something called as acquisition. Then there's something called as takeover. There's something called as absorption. There's something called as, let's say, purchase. There's something called as consolidation. And lastly, something called as merger. So whenever we look at the concept pertaining to amalgamation, part of corporate restructuring. Amalgamation is a subset of a much larger idea called as corporate restructuring. We look at these 7 terminologies. So the moot question right now is that whether we can consider all these 7 terms to be same or are they different. We'll just take up very clearly what exactly is the bunch of ideas. Amalgamation, absorption, purchase, concept of consolidation in this context at least, merger are handled together. These are together. These are ideas which are closely related to one another. Acquisition, takeover is totally different. So how do we understand the point of difference? Amalgamation is all about 2 or more companies becoming one. Amalgamation is all about 2 or more companies becoming one. At the end of this entire deal, you have only one company surviving the concept of the process of amalgamation. Whereas your concept of acquisition or takeover, you have A, B, C, 3 companies. At the end of this entire process, you will still have A, B, and then C. Imagine the case of Tech Mahindra, Mahindra Group software company, which gained control over Satyam Computer Services post the entire scandal involving Ramalinga Raju. Now, before we had Tech Mahindra and Satyam Computer Services. After we had Tech Mahindra, Satyam Computer Services, which was renamed as Mahindra Satyam. Which implies after the entire process where Tech Mahindra acquired only a stake, a shareholding in Satyam Computer Services, you still had 2 companies. This is acquisition. So acquisition or takeover is nothing but gaining control by acquiring shares. This is what our idea is all about. Now, there is a subtle distinction between acquisition and takeover. Let's not bother about that. But acquisition or takeover is nothing but gaining control by acquiring shares, which implies at the end of this entire process, all that we are trying to do is create a subsidiary or make an existing company a subsidiary. Now, once a subsidiary exists, it doesn't mean that the buyer will vanish or subsidiary will vanish. Both the companies will exist. This is what acquisition is all about. Then what exactly is amalgamation, sir? Amalgamation is a case where Tech Mahindra acquires the entire business. At the end of the entire process, you don't have anything called as Mahindra Satyam or Satyam Computer Services at all. The same Tech Mahindra, Mahindra Satyam at a later point of time went through amalgamation process. Now we have one idea called as Tech Mahindra. Coming back to the concept of amalgamation. So what is amalgamation? I just told that 2 or more companies becoming one. 2 or more companies becoming one is what an amalgamation process is all about. Then what is this purchase? What is this merger? What is this absorption? What exactly is consolidation? So these terms are often used in connection with amalgamation, but none of these terms actually mean the same. So what are they, sir? Now I'm just grouping them together. Purchase and merger as one lot, absorption and consolidation as another lot. So what exactly is purchase and merger? What exactly is absorption? Let us be very clear that These are all different types of amalgamation. An amalgamation can be in the nature of purchase, amalgamation can be in the nature of merger, it can be in the nature of absorption, it can be in the nature of consolidation. Amalgamation can be of any of these four types. Then why am I categorizing them into two groups? Purchase or merger are as per AS number 14. The existing accounting standard number 14 issued by the Institute of Chartered Accountants of India classifies amalgamation into A, purchase, or B, merger. This absorption or consolidation has got nothing to do with your accounting. These are all structural. I tend to call it as technical classification, but on a more proper term would be a structural classification. So these are structural classifications. Now, what exactly structural classifications are? I'll just give an example. So after a process called as amalgamation, what is the status? Before, let me say that there's a company called as A, B, and then C. After amalgamation, I have only A Limited. Before I have A, B, C. After amalgamation, I have a company called as B Limited. In both these cases, you can notice that there is an amalgamation. At the end of the entire process, there is only one company, but there is a subtle distinction. In the first case, we notice that the company that survives, A Limited, is an existing company. The second case that we can notice, the company D Limited that survives is a new company. The new company case is what we call it as consolidation. The existing company case is what we call it as absorption. Absorption is that type of amalgamation where one existing company absorbs the business of one or more existing companies. Consolidation is that type of amalgamation where one new company is floated, where two or more companies come together and become part of the new company, which implies two of us combine together to form a new brand, new identity. We can call that as amalgamation by consolidation. If one of us is going to acquire the business of others, we can call that as amalgamation in the nature of absorption. What right now Reliance Communication and Aircel are proposing to do is an amalgamation in the nature of absorption. Reliance Communication will absorb the business of Aircel. This is the existing business. What is purchase versus merger? Purchase versus merger are driven by 5 conditions which are stipulated under AS number 14. Those 5 conditions as stipulated under AS number 14 are satisfied, which implies 5 conditions satisfied. We'll say boss, this is merger. Not satisfied, we'll call that as purchase. What are those 5 conditions? What exactly is the principle behind those 5 conditions? You will get to know separately. But the moot idea right now, is it possible for me to interchange merger and consolidation? The answer is no. The concept of merger is a clearly defined idea under your AS number 14. The concept of consolidation is not defined anywhere in your accounting standard number 14 at all. These are all structural. Then why exactly are we looking at these points of differences? Very simple. A, B, C existing company. After amalgamation, you have something called as A Limited alone. Now this can be structurally absorption. Based on AS number 14, it can still be merger or purchase. This kind of scenario cannot be misunderstood as purchase. This cannot be misunderstood as merger. This cannot be just the purchase or just a merger. It can be either of them. That has to be assessed independently. So when you look at a question, don't try to equate absorption with purchase. Don't try to equate merger with consolidation. Thank you.